when you're looking for an investment, an off-plan project where you want to invest in and buy them, there are a couple of primary attributes you look at. The location, the type, the size, 1 bedroom, 2 bedroom, 5 bedrooms, what suits you, the style, and with that also the budget. And there's one criteria that's often a bit hard to find out from the information the developer provides, and you have to ask questions and dig deeper into it. And that is it a hands-on or hands-off investment? And what I mean with that is operations afterwards. Will it be up to you, or is it up to the developer who is also the operator? Now, there are two types of developers. There's one who just builds a property and sells it, and then he walks away with the profit he makes. And then you, as a buyer, have to take it and turn that into a working business, Airbnb property, a short-term rental, long-term rental, whatever it is. It's up to you, hands-on, for you to make it work. And then there's another type, and that's a developer who also wants to operate it. Typically, these are larger, more integrated developments with 50, 100, 200 units, where the developer is not just a large company, but they also build up a whole unit to operate it in the long run. They have an operating model. They want to get a fair share of the revenue this property will generate in the long run. And that's all fine. So nevertheless, for you as an investor, it's really one might be interesting for you and the other one not. And for a different investor, it's exactly the opposite. Maybe you live far away and you can't really do the hands-on. Maybe you don't have the time to spare for hands-on. So you do want a passive investment. Maybe you see it as something you like doing and you're good at, and you want to turn that property into a business, and you don't trust a developer to do a good job with it. So it's really up to you as an investor what is the right one for you. Nevertheless, there are a couple of pros and cons on each one. In an integrated, large-scale property that is managed professionally by one company that can use economies of scale, it can be a lot more efficient. That saves you cost. So it can be really generating more profit out of the same revenue. But also, you're basically tied to the skills of that company. If you as an investor are not happy with them, you can't negotiate much. The terms are set. If they succeed, great. If they don't succeed, you can't really step in. And that's really the trust problem. And if they fail, they will have a tendency to make you as an investor fail first before they fail as an operating company. So if things go bad, then your revenue, your profit will suffer first, so they stay in business. And if things are going well, then you maybe feel that way, that they get a better deal out of it. So that's the downside. On the other hand, for the hands-on investment, you have a lot more work to put in to make it a working business. You have to find partners to make it work operationally on a daily basis, and that costs money. So that is less efficient, and you have more risk. So if your unit is, not working on a specific day, but you have guests coming, so there was a flooding, there's some incident, electricity, who knows what, guests cannot come, you have a problem as a host. If you're operating a large operation with like 100 rooms and one of them is not working, you have more options to deal with that. So each of these models has its ups and downs. As an investor, step one is find out what is it that you really want. And if you want a hands-off investment, get passive income, you have full faith, full trust in that operating company. So you better have a very close look before you sign the deal. if you really want to go with them in the long run because you cannot choose later. So have a due diligence. What is it? Do they have other projects so far that they operate successfully? How do they want to do that? Are you happy with the terms of your contract? What share are you getting? Is it operated on a pool basis or as an individual unit? And with pool, I mean, you have your unit into that pool and you get a percentage of that pool. So let's say there are 100 units in that pool, you have one, you get 1% of the revenue that pool generates for each day. If you have your unit managed on an individual basis, then you might have the issue that they prefer to allocate guests to other units. And that's really was a feeling. It's hard to substantiate and it's hard to really deal with that concern. So it might be just an emotional impression you have, but there's not much you can do about them. So if you really go for the passive income way, I think a pool is a more appropriate way to manage that, and find a really professional hospitality operator who can do that in a highly efficient and high quality way. Now, on the other hand, the hands-on way, then in that case, it's really up to you to make everything work, have a close look at what he's building, and you have to do all the market research and find the partners, make sure everything works at the standard of quality that you're promising to your guests. So hands off, hands on, make your choice, go accordingly. And that also means for all the offers that you're looking at, find out, is it a hands-on or a hands-off investment, and filter out by that, even though the developers might not make it easy for you. If this video was any helpful for you, feel free to follow this channel for more real estate related videos.